in heat in the side. To get full details about concert chairs and this free trade-in certificate through the mail, call me toll-free now.
Call toll-free 1-800-635-0800. That's 1-800-635-0800. Call toll-free. Call 1-800-635-0800.
Instead of the phrase money in the bank, how about money in the Dreyfus? Specifically, Dreyfus Worldwide Dollar Money Market Fund. You want to talk income? Week after week, month after month, Dreyfus Worldwide yields top the bank money market average. That means more money for you. Money in the Dreyfus. Part of the reason, Dreyfus special yield opportunity. Dreyfus absorbs part of the management fee. We make less, so you make more. If you want to know about the special yield opportunity or how Dreyfus Worldwide yields compare to your money market fund, call 1-800-345-8000. For information, a prospectus. Checking, free checking. Your money is always yours to use. What better way to save America? To put muscle in your investment dollars. Don't bank on it. Dreyfus on it. Call 1-800-345-8000 and say, time I tried Worldwide.
This opening portion of Market Wrap is sponsored by the Travelers. You're better off under the umbrella.
Good afternoon, everyone. Welcome to Market Wrap. I'm Ron Insana. Bill Griffith and Neil Cavuto are off. President Bush is promising builders help for their beleaguered industry. In a satellite address late this afternoon, the president promised to unveil major reforms to help the housing market. And he says lower interest rates will contribute to a solid economic recovery that will also aid housing. Mr. Bush's remarks were delivered for the National Association of Home Builders Convention in Las Vegas. On Wall Street today, buy programs and a dose of short covering helped the stock market register modest gains as it closed the week out. Let us look at the unofficial numbers now on Wall Street with the Dow Industrial Average climbing about 8 1/4 points to 3235.02. Getting help today from Walt Disney, from Exxon, and International Paper. AT&T served as a drag on the Dow Industrial Average. Elsewhere, airline stocks and weakness in the rail issues pushing the transportation average down further today, off 19.5 points at 1365.10. The utility average continuing its effort to stabilize, up 0.50 at 214.01. Elsewhere, advances beat declines on the big board, 904 to 789, with 485 issues unchanged. Street, the S&P 500 closed up 0.88. The American Stock Exchange Market Value Index pulling back by a point, while the NASDAQ Composite continued to move into solid ground, up nearly 2 at 624.82. Well, yesterday's sell-off sparked a round of bargain hunting in the bond market today, but traders were generally cautious in advance of tomorrow's G7 meeting and, of course, the President's State of the Union address. Now, the G7 ministers are expected to discuss ways of spurring economic growth. At this point, that is a potentially bearish development for the bond market. Settling out the day, the 30-year Treasury is currently quoted up 4 ticks at 103 9/32. The yield stiffening just a bit to 7.71%. R.H. Macy junk bonds soared today on word that the retailer is considering a buyout offer from CBS Chief Executive Lawrence Tisch. Tisch is reportedly set to take a majority stake in Macy's by infusing it with $1 billion in new capital. John Teal picks up the story.
One thing is completely clear. Debt-ridden Macy's has to do something fast to raise cash. The store's bankers are reportedly refusing to let the chain tap a $588 million revolving credit line. And sources say suppliers are refusing to ship merchandise.
They have no time at all because vendors have quit shipping merchandise to Macy's, and unless there is this persuasive, electrifying measure that reinstills confidence, vendors are not going to ship any merchandise to Macy's, and you'll have stores Without merchandise comes spring.
CBS boss Lawrence Tisch has emerged as the most ardent suitor for the struggling retailer. Some believe he's offered $1 billion for the company. Others believe it's far less. Either way, Tisch has a reputation for buying depressed property at discounted prices and then selling them later for a fat profit.
Under the proposed deal, as we understand it, and we don't know the numbers, he is buying a very large, extremely well-established company with a wonderful name in retailing in the many communities in which it has stores at a bargain basement price.
But Tisch may not be the only bidder. Observers believe Hong Kong investor Sir Run Shaw is interested, along with real estate developer Alfred Taubman. Neither commented, nor did Macy's biggest shareholder, the GE Capital Corporation. But PaineWebber's Robert Lupo believes all three are actively engaged behind the scenes.
But I think the card game is going on here. I think there are a number of parties at the table, and it'll be worked out probably over the next 24 to 72 hours.
It's possible Tisch, Taubman, and Sir Run Shaw will buy Macy's together. Completely unknown is the fate of Macy's chief, Edward Finkelstein. He led the buyout that originally saddled Macy with its crushing debt burden. He may stay with the new entity, but his dream of owning and operating a great retail chain appears shattered. John Teal, CNBC FNN, New York.
Orion Pictures also saw its junk bond soar today, also on word of a financial rescue by broadcasting industry force. Published reports say Turner Broadcasting is in talks to help bail out the movie studio from Chapter 11 bankruptcy. Turner isn't commenting on that report. New Line Cinema and Metro Media, controlled by John Kluge, have already submitted a bailout plan for Orion, whose stock finished the day up 1 1/4 to 3 3/4. Well, the dollar took a spill today ahead of this weekend's G7 meeting in New York. Players reluctant to hold dollars for fear that G7 ministers will move to weaken the dollar against the yen and possibly work out a dollar-deflating coordinated interest rate cut. The dollar slipped almost 1.6% against the Deutsche Mark at midday on false rumors the Federal Reserve was taking initial steps to intervene against the dollar, as it did last Friday. The dollar settled weaker on the day, closing down a half yen against the Japanese unit, down 1 2/3 pfennigs against the Deutsche Mark at 159.45, and off 1 1/3 cents against the British pound, closing the day at 179.40. Now, precious metals, despite the dollar's drop, also slumped today, led down by a weakness in silver and the entire group's inability to sustain the recent rally. February gold off 20 cents by the end of the day, with March silver down 6 1/5 cents to $4.16 the ounce, although April platinum bucked the trend, climbing $2.30 to $346.50. Joining us now with his latest read on the action in the currency markets is David Gilmore. He is senior currency analyst with MCM Currencywatch. David, before we look at some of the bigger picture items coming up this weekend, today's action obviously quite volatile and seemingly quite diabolical in some ways. What happened today that knocked the dollar so hard?
Well, we saw some heavy selling out of Europe in both the dollar and the dollar against the yen and the dollar against the mark, and the European markets sometimes take advantage of sort of fertile grounds, thin markets. Friday's typically thin, very volatile. And we had the selling of dollars against the yen by the Fed last week. So the market's very susceptible to intervention from the central banks, and therefore the rumor went out, probably along with one of those big sell orders with the dollar.
And so currency analysts I spoke with today said the rumor was completely bogus.
That's right. The Fed was not in, the Fed was not checking rates, and neither was the Bundesbank, which also accompanied the rumor. There was another rumor that you failed to mention, and that is that they said German money supply, M3, had been leaked from the Bundesbank, and that the market had gotten a hold of that in Europe, and it was going to be above its 3.5% to 5.5% target range for December. That number officially will be released next week. So it'll be interesting to see if there's any leakage in information coming out of the Bundesbank.
The implication being that if the money supply in Germany is in fact expanding, the Bundesbank will tighten credit again.
That's right, or at least hold rates high and not give in to any request from Brady or President Bush or any other G7 representatives at the upcoming meeting to cut rates.
All right, now what about your view of this particular question? Clearly we have seen rumors all over the map all week long about what the G7 will likely do this weekend. Some say that a coordinated interest rate cut is in the offing. Others don't buy it. What do you think?
I don't buy it. I don't buy a coordinated interest rate cut. I don't buy a pact to drive the yen higher and the dollar lower. The meeting is, first of all, physically compacted into a very short time frame. They've chosen Garden City, Long Island, because it's very close to 2 airports. Officials are coming in from around the world for essentially a one-day session. It's going to end at 4 o'clock. That's not the kind of meeting where we would expect to see some grand accord or grand initiative emerge. particularly on interest rates. I think the bulk of the time will focus on the Soviet Union, or the ex-Soviet Union, the Commonwealth of Independent States, how to share the burden, the debt burden. And the Germans will be arguing for more help. They're shouldering the biggest load right now. They want to see more money put forward by the Japanese and by the U.S.
Will there be a quid pro quo, though, where the U.S. demands Germany cut interest rates in order to get that extra help with the Commonwealth? That's
right. There could well be, and I think the U.S. will probably try that, but I don't think they'll get very far. I think there'll be an agreement to disagree on interest rates and focus. The general thrust will be everyone's concerned about their domestic situation, and there's not a great deal of consensus for interest rate cuts across the board.
All right, longer term then, the dollar stable to lower, stable to higher, what do you see happening?
Stable to higher. I think next week we won't see the central banks intervening, and the market will gain some confidence, buy the dollar back, and find out where the Bank of Japan in particular is uncomfortable with dollar-yen, probably above 125. Dollar mark should move back towards 162.50, 163.
And if the Japanese stock market gets slammed, I assume the yen will take a bath with it.
Well, it's a precarious situation because very often Japanese will sell U.S. assets, repatriate money to cover their cash losses on their domestic market.
Right.
So it has a perverse effect of supporting the yen. So it's a little difficult call there. But certainly one to watch. Watch it for interest rates.
You're right, because the BOJ will ease if we break 20,000?
That's right.
Okay.
That's right.
David, thanks for joining us today.
Sure, Ron.
David Gilmore, Senior Currency Analyst with MCM Currencywatch, joining us here in our CNBC FNN studios. And when Market Wrap continues, the world's largest oil company reports sharply lower quarterly profits, and a look at our stocks in the news coming up ahead as well as we continue in this hour. We'll be right back. Stay with us.